Good afternoon. I'm Theresa Hinton, Chief Operating Officer at the NJCPA. Welcome to IssuesWatch. We'd like to start by thanking today's sponsor, Ignition. We have a brief welcome video from their partnership manager, Jenny Moore.
Hello to my colleagues in New Jersey. My name is Jenny Moore, and I am the Partnerships Manager for Ignition. I thought I'd take some time to tell you a little bit about Ignition. Ignition is the world's first client engagement platform and e-commerce platform for professional services businesses. We streamline how you engage in your clients and frankly get paid. Myself being a practice owner as well, I've been using Ignition since 2016, and I am one of over the 5,000 accounting professional firms around the world that are using Ignition to win new businesses with impressive digital proposals, to be able to engage in our clients with clear scope of work, and be able to get paid by automating our payments collection. Now, Ignition also integrates with several platforms that you may already be using, such as Gusto for payroll, QuickBooks Online, Xero, anything with a Zap connection, but most importantly, workflows as well. We integrate with Xero Practice Manager, Intuit Practice Management, and my personal favorite, Carbon. Now, if you would like to learn more information about Ignition, I encourage you to click on our logo that is found on the webpage. That will direct you to our website where you can start a free trial for 14 days.
Okay, let's get started. I'm joined today by Ralph Thomas, CEO and Executive Director of the NJCPA. Welcome, Ralph.
Thanks, Theresa.
We're also joined by Kathy Powers, CFO at Matheney Medical and Education Center, and the 22-23 NJCPA President. Welcome, Kathy.
Hi, Teresa. Good afternoon.
Today, we'll be covering many New Jersey issues, including tax updates, the economy, and pending legislation. We'll also discuss a number of national issues impacting the profession, including the CPA pipeline and the national economy, and tax and legislative updates. And we'll round things out with updates on some key NJCPA initiatives, programs, and services. So we're going to start today with our New Jersey section. Do you want to talk a little bit about corporate taxes, Kathy?
Sure, I'd be happy to. So Pennsylvania is taking steps to reduce its corporate tax rate, which is currently 9.99%, by 1% reduction effective January 1st. Gradually, they plan to reduce that to 4.99% by 2031. This will further widen the disparity with New Jersey's 11.5% corporate business tax. The Garden State Initiative, a group that advocates for economic policies that serve all New Jerseyans, is undertaking research to explore the impact of Pennsylvania's rate reduction on New Jersey. The NJCPA is working with GSI on a free webinar, which is being planned for late October. Further details will be available soon. Prompted by New York City's controversial congestion pricing plan, the New Jersey legislators are working to lure Manhattan businesses to New Jersey. The quote-unquote Stay in New Jersey plan, launched by Representative Josh Gottheimer, it would establish a new incentive program to provide New York businesses with tax credits for expanding business operations into New Jersey, to avoid having New Jersey commuters, having New Jersey residents commute to New York. It would be a tax credit program run by the New Jersey Economic Development Authority. New Jersey is currently offering a voluntary initiative to work with corporate taxpayers to expedite the resolution of corporate intercompany pricing issues. The transfer pricing initiative runs through March 2nd. Learn more at the link on your screen. The New Jersey Economic Development Authority is running a corporate tax credit auction. A pilot amount of $30 million in tax credits will be available for purchase. Applications are due October 7th. See the link on the screen for more details. Now on to individual tax. Applications are being sent to taxpayers by September 30th for the new anchor property tax relief program, which replaces the homestead rebate. Homeowners with 2019 gross income up to $150,000 will receive $1,500. Homeowners with 2019 gross income over $150,000 and up to $250,000 will receive $1,000. Renters with 2019 gross incomes up to $150,000 will receive $450. Applications are due December 30th. Senior freeze checks have started going out to eligible applicants. The deadline to apply is October 31st. Information available is on the link on your screen. The New Jersey gas tax is decreasing by 1 cent on October 1st. Ralph, what's the latest with the New Jersey business alternative income tax?
Well, several amendments to BATE, which the NJCPA successfully advocated for, are effective for the 2022 tax year. New Jersey source income will be the basis for calculating the BATE, as opposed to federal taxable income. A three-factor formula is used for the allocation of income to New Jersey for all pass-through entities, thereby increasing the likely benefit to New Jersey resident business owners. Tax payments made in tiered partnership structures can be applied to upper-tier non-individual entities. The need for non-resident withholding on partner income, where the taxpayer has a reasonable basis that the BATE would substantially cover the withholding amount required under the separate provisions of New Jersey tax law, has been eliminated. Overpayment of BATE taxes by a pass-through entity can be applied to future estimated taxes or, if preferred, refunded. In the initial adoption, the overpayment had to be refunded, and the highest tax bracket has expanded to include distributable income in excess of $1 million. This allows the BATE to more closely align to the tax brackets of the gross income tax, further helping business owners benefit from the legislation. Learn more about the BATE at the links on your screen.
Thanks, Ralph. The New Jersey Division of Taxation has provided us with some additional updates to pass along to you. Practitioners who are making payments on behalf of clients or clients who are making payments need to be careful to submit the CBTU payments under the Unitary ID number. The division is seeing 2021 and 2022 payments submitted under existing separate entity accounts. With regards to mandatory combined reporting, taxpayers are obligated to file the CBT 100U for affiliated groups for tax years 2019 and subsequent. The division is still seeing taxpayers who seem unaware of this obligation. If this happens, the group needs to amend its original filings. Collections and enforcement staff are contacting taxpayers after bills are issued, but before their cases are sent to Pioneer for collection. This helps the taxpayer avoid the possibility of the added 11% recovery fee. Business entities that are enrolled in the pass-through entity/BATE and submit a bulk sales application to purchase a business or business assets do not need to submit an asset transfer tax declaration form, or TTD. This is the form used by taxpayer or accountant to calculate the tax for the estimated capital gain. The division is recruiting and hiring approximately 185 individuals across the organization this fall. The NJCPA community will begin to see some new faces throughout the division starting in November and December. The division has an existing letter ruling process. Representatives can request a ruling on behalf of a client. The practitioner submits a written fact pattern, and they need to respond to queries from the division's attorneys. The determination is a ruling that their clients can rely on. There is no fee for this, and it often takes less than 90 days to receive. We're going to talk a little bit now about New Jersey's economy and business environment. Ralph, do you want to start with the New Jersey budget?
Sure. New Jersey passed a $50.6 billion budget for fiscal year 2023, and that's 8% higher than last year. Some of the big ticket items include a record $6.8 billion surplus, a full pension payment of $6.82 billion for the second year in a row, $5 billion for the debt Defeasance Fund, $2 billion for the Anchor Property Tax Relief Program Kathy talked a little bit about earlier in the program, a tax credit of between $100 and $600 per child for families making under $80,000 per year, $9.9 billion in school funding, and $1.9 billion for the School Development Authority School Facilities Project. To take a much needed multi-year look at New Jersey's finances, the Sweeney Center for Public Policy convened a work group of policy experts, economists, and former high-ranking administrators and legislative budget officers. I was able to represent the society in. Now, in this work group, we were tasked with forecasting if New Jersey's revenues will continue to grow or if the state is facing a fiscal cliff that would force tax hikes or budget cuts if a recession hits. I have long been calling for multi-year budgeting, and some of the findings in our first report are eye-opening. New Jersey's Jeff Kasman recently talked with one of my fellow members on the work group, Charles Siddell, about the findings in the report. Here's what he had to say.
Well, you start with, of course, the last couple of years, and it's true in this budget, New Jersey found itself passing a budget where the state had a lot of cash, was in a strong cash position, which is entirely against where the state has been for the last 20 or 30 years. And I think part of the question is we wanted to dispel the euphoria that this situation could well likely not exist, and the state could find itself in a position in the not too very distant future where it has to make some hard choices to maintain its balanced budget. And we just wanted to lay out the scenarios in which this can happen. This is something, the sort of procedure which most states do. New Jersey, for whatever reason, has never done this as a formal process. So former Senate President Steve Sweeney thought it was a good idea to get some people together who've worked in state government, administrations of both parties and other people to lay out possible scenarios and see where the state would be in the next few years under current policies. The methodology was pretty straightforward. Like I said, it was what we call a current services forecast. What we were assuming some basics, that there has been some aid from the federal government to support Medicaid and New Jersey Transit. That will fade. That's laws. We have to take that into account. The assumption is the current ramp up in school K-12 funding to the formula that was agreed on about 10 or 15 years ago will continue. For the rest of the state budget, it's basically just cost increase, sort of ongoing cost increases. So that's the spending side. On the revenue side, in order to avoid disputes, we accepted the administration's projections for fiscal year 22 and 23. That's part of the budget document. The document has revenue assumptions for fiscal 23. Then we put together economic scenarios, how the national and state economy would do, a range of them, and tried to project what New Jersey's tax revenues would be for them. And that leaves us with a spending scenario and a revenue scenario, a series of revenue scenarios, actually. And that leads you to just calculation, just run the arithmetic. How much cash would the state have left over under those scenarios? And we know under the state constitution, the state is, except in very unusual circumstances, is not allowed to borrow without voter approval. It's supposed to have a budget which is based on the resources assumed to be available in the fiscal year. And so the question is, would the state run out of cash? The general belief is an overwhelming chance, and this is based on an assumption that the economy doesn't boom, the economy could boom, that the state would run out of cash in the next 2 or 3 years, that the state would run through this enormous surplus. And that wouldn't, at the time we were saying there's about an 80% chance that would happen. I think I would raise the chances a bit now because that was in June. The economic outlook seems a little less favorable. So we thought there was a very high probability the state would run out of cash, not this year, not next, but say fiscal 25, fiscal 26, which would require some mid-course directions. The state would have to change some policies.
Well, that was very interesting. What do you think about being on that group?
Well, I was glad that we were on there because I've always wanted the society to have a seat at the table, and and one of my little mottos is if you want to know what's happening here in New Jersey, who better to ask than CPAs because they pretty much touch every constituency here. I like what the former Senate president was doing with this multi-year budget. I think the thing that we have to be cognizant of is that people are used to what the past was, and so there may be some pushback on the former Senate president's positions on this. But I think it's a good start to us looking at multi-year budgeting for the state.
Yeah, because I mean Charles's comment about euphoria, I thought was particularly appropriate because when have we in New Jersey had a surplus? It's been a long time, right? Even making fully funded pension payments, right? So I think that the general population might think that oh, we've done such a great job, that's why we're in this surplus situation. But it's really due to the fact that we got a lot of financial aid because of the COVID pandemic.
Yeah, and I think too we have to be careful from the perspective of saying, oh, we have the surplus, and then look to add on new initiatives and things of that nature that don't have a funding mechanism. I mean, for other than taking out from the surplus. So I think we have to be very cognizant of those things and look to, I think, take a step back and look at what areas could we downsize in state government. I think that was one of the things that Governor Murphy in his first run for governor was thinking about doing, and I don't think we've seen that. And I think that's something that needs to be done so that we can prepare ourselves for, a downturn in the economy if that happens, and not be reliant on, well, we've got this surplus, so everything is, all good, and then all of a sudden, things hit the wall.
Especially with fears of a recession kind of looming in the background.
Exactly. I was just going to add to what you were saying, Ralph, that as CPAs, we are traditionally fiscally conservative, and it's important to be prudent. So really looking forward to the numbers in the future rather than just looking at year by year is really important. And, the speaker recently spoke to some of the fears relative to recession. Depending on which economist you speak to, they'll tell you we're either in a recession or we're not, because there are so many factors that go into that calculation. But, Theresa, like you and I were speaking earlier, if you go to the grocery store or the gas station, it certainly feels like we're in a recession.
Right,
yeah. And I think, too, we have to look at the fact that, while we pitch that New Jersey is a great place for people to come, if we don't make it affordable for people to live here, then I think, that's one thing that we will have challenges for.
So our next topic is going to be New Jersey legislation. Kathy, do you want to start us off on that topic?
Sure. Legislation that prohibits tax preparers from engaging in certain practices involving refund anticipation checks and loans was recently signed into law. The business community's request to Governor Murphy to use federal COVID relief money to provide aid to the state's unemployment insurance fund fell on deaf ears as the budget was passed in June without any assistance included. The NJCPA will continue to work with other business groups to move legislation requiring assistance, but ultimately any legislation would have to be signed by the governor. Legislation that de facto forbids restrictive covenants in employment contracts is moving again. The NJCPA and the business community oppose this bill. Legislation that the NJCPA helped to draft would make important administrative changes to the gross income tax and the corporate business tax. It would end COVID-related extensions concerning certain state taxes and eliminate the requirements to affirmatively elect New Jersey S corporation status. The bill also provides for an opt-out of the automatic S corporation election. The bill was passed by the Assembly in the spring and is expected to move in the Senate this fall. Governor Murphy and the legislature recently issued 3 proposals to fight unfair taxation of New Jersey residents by other states where their employer is based. The issue has cost New Jersey billions to foregone revenue. We'd like to see more details on the exact language of the proposed legislation, but on the surface, this certainly appears to be an important counterstrike at states, particularly New York, that have been unfairly and aggressively taxing New Jerseyans who work from home. However, the proposal wants New Jersey residents to ask New York to send their income taxes to New Jersey instead, through the courts, if necessary. This is a burden our members have told us that most taxpayers will be unwilling or unable to take on. We'll continue to track the progress of this legislation and provide updates.
So, turning to the state board, our favorite topic, the 150-hour requirement, has come getting a lot of attention at the state board. So much so that one of the members of the state board proposed an initiative to let students earn college credit for internships they have at various firms. It should also count towards the experience requirement for CPA licensure. But this has not been definitively confirmed by the board or the council yet. They are expected to issue some guidance soon, so that's something that we'll stay tuned for. The NJCPA has recommended several candidates to fill vacancies on the New Jersey State Board of Accountancy. So if any of our members out there are interested in serving on the State Board of Accountancy, they should reach out to us and let us know that. It's a great opportunity to not only service the profession, but network with other individuals from other disciplines and areas there. So stay tuned for that.
We're now going to close out the New Jersey section and move on to the national issues and updates. We've been talking for a while about the declining number of people pursuing an accounting education and CPA license. We recently surveyed various segments of our membership about the CPA credential. When asked accounting students what the main reason is for them wanting to become a CPA, 29% said it's because of the financial benefits. 27% said it's because CPA is a highly regarded credential. 24% said it's because of job security, and 18% said they want to help individuals and or businesses. When we posed these same questions to CPA candidates, those who have graduated and are in the process of getting their license, there were some interesting differences in the responses. 44% of candidates said it's because the CPA is a highly regarded credential. 24% said it's because of job security. 16% said they want to help businesses and individuals. And only 4% said it's because of financial benefits. When it comes to what influences people to become a CPA, the greatest influencer for students is their professors, with family a distant second. For CPA candidates, the greatest influence shifts to their employers or coworkers, with family once again coming in a distant second. When asked what the challenges they see of becoming a CPA, there were some clear trends among all survey groups. Students, CPA candidates, and firm managing partners and HR staff said the time involved, fear of failure, trouble fulfilling the requirements, education and experience, and the cost. We recently talked with several young NJCPA members about what can be done to attract more people to the accounting profession. Here's what they had to say.
I think high school and starting that conversation freshman year and continuing it sophomore, junior year really can get people prepared to put together a thoughtful application for one of the NJCPA high school scholarships. I think that's where they can get a lot of excitement going and take it forward. It's boots on the ground, and I even met somebody on the golf course the other day who's home for a few more weeks before he goes back to college, and I said, hey, here's my card. Just shoot me a text if you ever want to get together. Let's just talk about what you're going through. He's a sophomore in college right now. And it's really us just being there and offering that hand. And people are going to want to work with somebody that they trust. And that first decision, wherever you're going to go right out of school, or if you're making a career switch, the fact that you trust somebody where you're going to go, where you're hoping to go work, a potential employer, is going to make a world of difference. And I think that's what will initially attract people. That CPA pipeline can continue. We can restock it. We can kind of restock the farm system as the Yankees have done these last couple of years, and they're not bringing anybody up, but we can restock the farm system and really get those people onto our teams quicker, and maybe we can actually hopefully their careers will grow with us.
We need to do more, I think, as a profession to get at those younger groups and get them excited about accounting. It's not just putting numbers in boxes. We're advisors. There's a whole world beyond the paper side of accounting, which is the stereotype that they get dealt when they're in school.
We can also continue to increase awareness among the students and recent graduates of the long-term stability and growth potential in an accounting career. Because nowadays, right, you can see that many young people tend to choose careers in content creation and technology sector and not really like pursue an accounting career during college and afterwards. So I think increased awareness, any campaign that would be authentic and, that would highlight the benefits of an accounting career in the long term, that would help on this problem.
We posed the same question to 3 New Jersey accounting professors, and here's what they had to say.
Students who major in accounting, we are immediately telling them and informing them and educating them about the benefits of the CPA license. And I think awareness and education as early as possible, and the steps needed to get on that pathway to the CPA. And they might not choose to do it in the end, but for them to have that awareness of what the CPA license offers in terms of optionality of career paths and then also salary potential is a compelling argument. And it's helpful. And students tend to gravitate towards that message.
Our profession has changed profoundly. And I think we need to do a better job of telling people what it is that you can do with an accounting degree.
We try to bring the students to the NJCPA convention, which is a big plus to get the students engaged in the accounting profession. And the feedback I get is always very, very positive. So try to meet, local CPAs through mentoring programs that we try to do at Stockton online, again, through our local chapter. Just try to get them connected to a CPA.
We spent a lot of time talking about pipeline and what's going to attract the next generation of people to the profession. What are some of your thoughts?
Well, a couple of things that I heard on all of the videos, which was very interesting to me, was perception and getting to the students early, getting them early in their educational career to engage them in what we are as a profession, who we are as CPAs, and what that type of job role entails.
Yeah, I just agree with that. And I think Professor McDowell from Ryder really made the point. We need to do a better job of communicating what today's profession is. I think we sometimes, don't do a good job of talking about all the different things that are happening. And, I go back to say that, people view us as auditors and tax folks. But in today's environment, that is so different. I mean, our firms are strategic advisors to their clients. And I think people need to understand that and the opportunities that exist within, the firms. It's just not that you're going to do audits and tax. You're going to be advising. And I think that's so important in today's environment that, the folks that do a good job of marketing their profession get the people to come to their profession. And I think that's something that we need to do a better job of. And I think we need to, there was one other point earlier about getting to people earlier. We have a good high school program here where our members go out, but a lot of kids have already made up their mind by the time they're in high school of what they want to try to do when they go to college or what profession they want. And I think, trying to get accounting as a STEM initiative, I think would be very helpful. We are working very hard putting that before the folks down in Washington to do that. And if that doesn't happen, then maybe tagging along to the technology STEM. But we really do have to step up our game and do something better. I think when I first came to the society, a member came to me and said, we need a television program. And I said, yeah, I think you're right. But we need funding for that. It's just not going to come. So I think we really have to step forward and really do a better job of communicating what today's profession really does. And I think that initiate some excitement, and particularly if we can get accounting captured as a STEM initiative and AP course. Yeah. It's hard to believe that accounting, which is the
basically business.
Backbone of business is not considered for AP, and I think that we lose a lot of kids to the AP courses.
Oh yeah,
in disciplines
because they're all especially your high achievers in high school are all looking at their overall GPA and what it looks like, the rigor of their courses to get them into their desired colleges. So we can do a better job of that. And if we do end up getting accounting designated as STEM initiative under the technology arm of STEM, I think it would also lead us. It will enhance the CPA evolution that's now coming about through the exam. Right. So that leads us into our next topic, the CPA evolution and what's happening with the new exam.
Yeah, well, the exam's going to change in 2024. So those of you who are out there studying right now, don't wait. Take the exam right away, and you'll be glad that you did it. And then the exam change that's going to take place is reflective of what's taking place in the marketplace. So previously, I remember when I took the exam, you had to take all 4 parts at one time, and hopefully you needed to pass 2, then you could go on and do the rest of them. But now you get to some choices. You'll have to take 3 core courses, 3 core bits. But now you'll have in your 4th choice an opportunity to take various programs in that. So I think that's important. But for those that are already studying for the exam, do get it out of the way. I tell you, from a person that has sat for it a number of times, I'm so glad my certificate says, let's say my score and how many times I took the exam. But, so I think it's really important that we make a push on that, and that's something that we're going to really challenge our educators with when we have our academic forum in October. So stay tuned, and we'll give you more information on that.
We actually have a video that'll talk a little bit about what the accounting educators are saying.
Okay.
I'm excited about the new format of the exam. I think it's great, the process that was undertaken to kind of shift towards this new model, because it reflects just the profession sort of going out to the market, also talking to educators, understanding students, and kind of like just reinvigorating and kind of bringing new imagination to kind of how we can better tailor the exam to what's needed. The role of technology within the profession is exciting. I think it's an invitation for students to not only become accountants and CPAs, but be technologists and be data visualization experts. There's so much there. There's so much meat on the bone that I think is aspirational in terms of what the new exam is asking students and educators to kind of direct ourselves towards.
We are infusing more data analytics throughout our course curriculum. We are also adding data analytics as a part of a concentration that you can take more classes in that area. We have a special MAT course, our Master of Accounting, that takes data analytics and put the students use those tools in an accounting context. So we're excited. We're excited about it. I think, will it increase the number of students taking the CPA? Absolutely.
In some of the electives, we're putting those electives in to accommodate that extra 30 credits. So we're giving the students the path to get, stay at Stockton for the 150 and take additional tax courses, take government and accounting, and take some additional courses so that they have a benefit. And they don't have to take something that is unrelated to business or unrelated to accounting to meet those extra 30 classes. So we're getting our curriculum updated with data analytics. and also trying to even, working with SAP, getting the SAP program so that we can get supply chain management to these students and to get these courses ready for that, those, for the core and for those specialties in that CPA exam. But the big thing is the mapping, to make sure that our courses have the content to get students to that CPA exam.
Okay. Blueprints of the new exam have been released, and the AICPA is seeking input by September 30th. Learn more about the link on your screen.
Before we move on to our next section, we did get a question. Isn't the 150-hour requirement a deterrent to students, especially when one can get an MBA and end up with the same or more career opportunities? What do you guys have to say about that?
Well, I'll speak to the survey that was done by the Illinois Society, which showed that that the 150-hour requirement, while we hear a lot about it being a deterrent, really wasn't in the top 5 or top 4 of why people didn't sit for the exam or pass the exam. So I think, in today's environment, there's a way that I know initially when the 150-hour came out, people were concerned about the cost, and now students are taking, class overloads or whatever, and double majoring and things of that nature. So I don't think that, personally, I must admit I was a proponent of the 150-hour requirement, but I thought that it should go beyond accounting and into other areas, and that was where I was disappointed not to see that. And I think that that's where we perhaps blew an opportunity to really elevate the profession.
And have some guardrails about
what
kids can take, right? Basket weaving should not be.
Yeah, I remember, when we were going to, down to Trenton to advocate for the 150-hour requirement, one of the senators said, well, shouldn't there be specificity and whatnot? And I think that that's where we made a bad decision and punting to academia to let them determine that rather than what we were seeing in the profession as the needs or things that individuals who were majoring in accounting needed to add to their skill set.
So more to come. I mean, I don't think 150 hours is going away, and so the best we can do is work within it and try to make the profession.
Yeah, and I think the changes and things that our State Board of Accountancy are looking at are a good first step. Yes. And so there's a pilot program going on with one of the Big Four and St. Peter's College, and we'll see how that works out and see if that can be helpful.
Yeah. So we're going to move on now to some legislation, tax, and economy issues at the national level. Kathy, do you want to start us off with the Inflation Reduction Act?
Sure. So the Inflation Reduction Act was signed by President Biden on August 16th. Numerous tax provisions, including a 15% corporate alternative minimum tax imposed on the adjusted financial statement income of corporations with a 3-year average annual income in excess of $1 billion for taxpayers starting in 2023. And that's why we need CPAs, because that's a lot of information. This is the most prominent corporate tax raiser in the Inflation Reduction Act, and the first corporate minimum tax based on U.S. GAAP book income standards since the 1980s. The ISCPA has repeatedly lobbied against this proposal and was disappointed to see it included in the bill. They are concerned that it will create more congressional pressure on FASB to try to get certain outcomes. Its basic goal is to ensure that if a large corporation reports profits on its financial statements, but reports low or no income to the IRS, that it must pay some amount of tax on the difference. Calendar year-end companies should start preparing as soon as possible for the January 1, 2023 effective date. The Joint Committee on Taxation estimates that this new tax would affect about 150 companies annually and would fall most heavily on the manufacturing industry. Other Inflation Reduction Act tax provisions include a new 1% excise tax imposed on each domestic corporation where the stock of which is traded on an established securities market. An excise tax will be imposed on drugs sold by manufacturers, producers, or importers if they are not included in the Medicare Drug Price Negotiation Program starting in 2026. The Residential Clean Energy Credit is extended through the end of 2034. The Energy Efficient Home Improvement Credit has been extended through 2032. There's a new $7,500 credit for purchasing a new clean vehicle and a credit of up to $4,000 for the purchase of certain used clean vehicles. Beginning in 2023, the Medicare hospital insurance tax can be used to apply up to $250,000 in research credits. And the limitation on excess business losses of non-corporate taxpayers is extended for 2 years. The Inflation Reduction Act also includes $80 billion of additional funding for the IRS. The NJCPA is helping to clear up some misinformation about what the funding will be used for. It will be used to increase IRS staffing, improve IT systems, and better serve the taxpayers. The IRS Commissioner, Charles Reddick, said that the IRS will not be using the funds to increase the number of audits, particularly for those earning less than $400,000.
So CPAs and taxpayers are continuing to suffer from the backlog at the IRS. Last month, the AICPA, NJCPA, and many of our other state societies endorsed a congressional letter to Commissioner Reddick urging action to address the backlog prior to the 2023 filing season. In early September, the IRS reported that it was making progress on its backlog of unprocessed tax returns. As of August 29th, the IRS said it had that the number of unprocessed 2022 returns down to 8.7 million from a high in May of 21.3 million. However, it's expected that the current return and correspondence backlogs and customer service issues will worsen again as we pass the September 15th and September 30th deadlines. We will continue to work together with the AICPA and our other state societies to advocate for appropriate funding to support an effective and efficient tax administration system. Kathy, you want to talk about our student loan debt?
Sure. The Student Loan Relief Plan was signed by President Biden on August 24th. It cancels up to $20,000 in student loan debt of Pell Grant recipients who earn less than $125,000 annually or $250,000 for married couples. It cancels up to $10,000 in debt for those earning $125,000 annually or $250,000 for married couples. It extends the pause on the federal student loan repayment one final time through December 31st. An estimated 8 million people will receive the relief automatically because the Department of Education has their income data. Those who don't get the automatic relief will be able to apply online in early October. Sign up for alerts on the application process at the link on the screen. Loan forgiveness is not taxable on the federal or New Jersey state levels. Borrowers in New York, Virginia, and 11 other states could face up to $1,100 in state taxes on unforgiven loans. NJCPA fellow, associate, and CPA candidate members can apply for $1,200 towards their remaining student loan debt during our student loan debt lottery this November.
The country's fiscal year end is September 30th, and the government must pass a continuing resolution to avoid a government shutdown. Therefore, all focus in September will be on continuing resolution or CAR to fund the government. The CAR will likely extend through the end of the year and will require bipartisan support to pass in the Senate. The big question with the CAR isn't necessarily how long it will extend, but what else will it extend? Various expiring programs such as the National Flood Insurance Program and Temporary Assistance for Needy Families, formerly food stamps, will also need to be extended. Other potential items that could be attached include items not allowed as part of the Inflation Reduction Act, such as resources permitting and pipeline in West Virginia. Supplemental funding for COVID and other health outbreaks such as monkeypox, and additional funding and support for Ukraine. Senate may consider the fiscal year 2023 National Defense Authorization Act, or the NADA. The House passed the bill over the summer. More likely, the NADA will be used later in the year as part of a lame duck negotiation, a litany of year-end issues.
So before I move off this topic, we did get a question. The question is, do student loan borrowers need to apply for relief? And if so, when will the application be available? The answer to this question is yes, in most cases, and the application should be available sometime in October with a deadline in November. So what are your feelings on the student loan debt forgiveness?
I'm not sure. I mean, I think that it's a big undertaking from an economic impact, but for those folks that have taken on substantial amount of debt to go to school and further their education, it will certainly be a welcome relief to them. It's loan dollars are well in excess of this $20,000 or $10,000 that they're being forgiven. So I think they still have a big hill to climb as far as repaying off their debt.
But you see where some people can have some, negative feelings about it. If you didn't go to college, you don't have student loan, you went on to take another, suppose you became a welder or something that didn't require 4 years of college, but you still had debt. None of that debt is going to be forgiven. So you can see where it's both sides. And I guess as part of the Inflation Reduction Act, do we feel that, student loan debt is actually going to reduce inflation? I don't know.
Well, one of the things that we're seeing is that, not just in accounting, but across the board, a decline in enrollments in colleges. So many individuals who are graduate from high school taking advantage of what they call the gap year and saying, okay, what is it that I'm going to do? And what area do I want to focus on? So I think, and you look at today's cost of college tuition, I hate to say what, I paid to go to school versus what it is now. It's just shot through the roof. And I think that's a result of, you don't have as many people going into being educators these days. And so also the competition between colleges to, have the best programs and everything of that nature has really driven the cost of college up in college tuition. Incredible.
Yeah, and I would say it doesn't really address the root cause, right? So it's certainly placates for now or helps folks out for now, but it's definitely not addressing the root cause of this issue, which is the cost of attending a four-year university.
Absolutely. So we're going to move on here to the New Jersey NJCPA section and talk about some key NJCPA programs, initiatives that we have going on. Kathy, do you want to start with our upcoming bylaws vote?
Sure. We have a bylaws vote that's coming up in October. And the bylaw changes will merge the current CPA candidate and associate member classes into new membership class named affiliate. CPA candidates have completed the academic requirements to become a CPA and are pursuing further requirements necessary to become a CPA. And associates are any chartered accountant or its equivalent in any country other than the United States. The following additional professionals would also qualify for affiliate membership: professional staff working in an accounting or finance position under the supervision of a CPA, instructors of accountancy in schools of collegiate standing, non-CPA owners, partners, shareholders, or principals of firms licensed by the New Jersey State Board of Accountancy. Affiliates would not be allowed to vote on ballot measures presented to the membership, but may be eligible for limited leadership positions, including chapter board positions, committee chair, interest group leadership, and appointed committees. It also changes the definition of student member class to an undergraduate or graduate student who has an interest in accounting, finance, business, or information systems. This aligns with the new CPA exam. Thirdly, it renames the fellow member class to CPA member, and eligibility remains the same. The vote on the bylaws will take place starting October 18th through November 1st. New Jersey CPA fellow members will receive voting instructions via email. Learn more at the link on your screen.
So far we've had only favorable feedback on this bylaws, and I think it will go with all the CPA pipeline and CPA evolution that we've been talking about here. This change, this affiliate member change, is in keeping with what's going on in the profession.
Yeah, and I think our board members who have gone out to the various chapters to talk about this issue and also future discussions on are doing a very good job at why we need to think about doing this and making this change. So, whereas I think when we did it the last time, we probably didn't do as good a job, and so we've learned that the best way is to have peer-to-peer discussions on that, and I'm very hopeful that it will go through without any problems.
So we do have another program that's we're currently talking about here at the NJCPA. It's called the Member Get a Member program. The strong partnership between NJCPA and its members is a primary reason for NJCPA's sustained success for almost 125 years. The NJCPA cannot grow membership alone. We need help from all of our members. Help grow NJCPA membership by referring membership to your peers and colleagues. They want to hear about your personal experiences with the NJCPA. How does membership support you? How does it help you stay competent? How does it connect you to peers who work through similar challenges and opportunities as you do? Please encourage your network to join the NJCPA. We've created a Member Get a Member program that provides you with guidance and tools to make it easy to promote membership. Get started by visiting njcpa.org/MGM. I want to say Member Get a Member. Together, let's grow our community. Chapter events and season passes are now available on our events bundle page. Many NJCPA chapters have returned to holding in-person CPE programs. See the list of events and purchase a chapter season pass at njcpa.org/chapters. We're commemorating our 125th anniversary in 2023 with an impressive display of historical timelines, exhibits, and artifacts, photos, articles, and other things showcasing the NJCPA's evolution and accomplishments over the years. If you have any NJCPA memorabilia, a special story, or details about an NJCPA milestone you'd like to share, email Rachel Bell at rbell@njcpa.org. Upcoming Membership Plus programs include Don't miss out on upcoming free webinars that come with your NJCPA membership. The schedule is listed on your screen, and you can register at njcpa.org/plus. Career awareness programs. We've talked a lot about the CPA pipeline, and here is one way that you can help. Sign up to make a presentation at a New Jersey high school this fall. Learn more and sign up at njcpa.org/career presentation. Our food drive will kick off on September 26th and runs through November 18th. Last year, we collected more than 2,690 pounds of food and more than $38,000 in online contributions. That was amazing. Please help us exceed this goal in 2022. In addition to career presentations and the food drive, we have many opportunities for you to create an impact in the profession and give back to the community. Learn more and sign up at njcpa.org/volunteer. We'll soon be accepting applications for our scholarship program, and we'll also be holding our annual CPA exam fee lottery in October. NJ student and CPA candidate members can enter for a chance to receive a $750 award towards their CPA exam fees. More information about both these opportunities will be sent out soon. Once again, I'd like to thank Ignition for sponsoring today's event. You will be receiving a link via email to a short session evaluation survey. Please take a few minutes to fill it out. In addition, you should receive your CPE certificate within 1 to 2 weeks. If you have a colleague who missed the program, We will be replaying it on September 14th at noon. As we wrap up today, I want to thank Kathy and Ralph. It's been a pleasure. Have a great afternoon.
Thank you, Theresa.